Good morning and welcome to Charting the Markets on Monday, the 20th of November 2023. Asian markets were mixed earlier this morning with the Nikkei 225 dropping by about a percentage point, but the Shanghai index and also the Hang Seng being in positive territory as the People's Bank of China left its lending rates at its November fixing as expected. And this comes after 3 consecutive weeks of gains for equity markets. And if we look at the European markets, for example, the FTSE 100, we can see that here we have also basically been rising, and on Friday added to those gains of the week, despite weaker than expected retail sales coming in the UK. And we are currently grappling with the 55-day simple moving average here at 7,503, but are still trying to reach last week's high at 7,535 on this daily financial bet. And as you can see here, we are now trading since the end of October in a gradually ascending upward trending channel. And if we were to take out last week's high at 7,535, we would then be heading towards the red line here, the 200-day simple moving average at 7,600, before we can then attempt to reach the July to October highs between 7,702 and 47. So further upside basically in store for the FTSE 100 from a technical perspective, provided we stay above the last reaction low, that is to say the low from last Thursday, here at 7,403. As long as we stay above there, further upside is to be seen most likely, even if short term we might be capped around the 55-day simple moving average at the moment. Now in Germany the story is quite similar. We had a 4th straight month of weaker producer prices out earlier this morning. And I believe we saw a number of minus 11% year on year after the previous month's very, very negative number of minus 14.7%. And that has led to the DAX 40 consolidating slightly today after having seen 9 consecutive days of gains. And as the index is entering its early to mid-September highs between 15,992 and 16,444 on this daily financial bet. So yes, we are in a very important resistance area, so it's not surprising that the DAX 40 is basically consolidating slightly. Also, as this week the earnings calendar is drawing to an end, and also as the economic calendar is really not showing us much interesting data. I mean, we have on Wednesday the FOMC minutes. We also have durable goods orders out of the States and services and manufacturing PMI data, and perhaps Japanese inflation on Friday. But apart from that, really not much is going on, except that in the European markets we had an upgrade earlier today by Moody's with regards to the outlook for Italian debt. So an upgrade's been seen there, and that was quite positive for that local market. But if we look at the US markets, as I said, ahead of FOMC minutes, we are just trading sideways after having seen these very, very strong gains with regards to the Nasdaq 100. As we can see here, we basically rose by over 12% from the late October lows here at 14,055 on this daily financial bet, and intraday rose to 15,978, which was above the July peak at 15,932, which is currently still capping the advance short term. Now, the trend is your friend, and that's still clearly pointing up, even though we're testing this steep uptrend line at the moment with regards to the Nasdaq 100, ahead of this evening's Zoom earnings and ahead of tomorrow's earnings by the likes of Best Buy, HP, and also Nvidia. But basically, the odds are that we will at some stage rise above the July high and also above last week's high at 15,978, and then attack the psychological 16,000 mark. And above that, we would have to go out onto a weekly chart to then look at the high seen back in December of 2021 at 16,660, which would be our next medium-term upside target. But as we can see here, we have now ended and broken out of this bull flag which was in place between July and October of this year, as you can see, and are resuming our long-term uptrend with regards to the Nasdaq 100. And basically this state of affairs will remain in play as long as we stay above last Thursday's low at 15,139, which we don't expect to be slid through at all. But as I say, further upside is most likely to be seen in the days and weeks ahead. The US dollar continues to slide as US yields are also dropping to 2-month lows, and with the dollar index dropping to 2.5-month lows, we saw the benefit of that for some other currencies such as the euro. And if we look at the daily euro dollar daily financial bet, you can see here that we've now risen to 109.40, actually, not just 109.36, which I put on this chart, and are very much approaching now the late August high at 109.45. Now, it together with the high seen back at the end of June at 110.12 represents the next upside target area and resistance zone for euro dollar. So it wouldn't be surprising if we were to short-term consolidate in that area. But the trend has now clearly changed direction from a downtrend from the July highs at 112.75 into the lows at the beginning of October at 104.60. And now we're moving out of that downward pattern again. We're trading back above the red line here, the 200-day simply moving average at 108.08. All of which is positive and means that we are likely, once we've taken out this resistance area between 109.45 and 110.12, to then reach the 110.65 mid-August high ahead of heading back up again towards the July highs at 112.75. So in my opinion, the trend has changed direction and euro dollar should continue to rise on that weaker US dollar. And the same story is actually being played out here with regards to the British pound against the US dollar. As you can see here, the advance is more gradual as UK inflation keeps on falling away. Last week it dropped, I believe, to 4.6% year on year, and as we saw weaker than expected retail sales. But despite that, we are now in an uptrend. As you can see, we have a series of higher highs and higher lows on cable and have so far risen to 125.06 on this daily financial bet last week, a level which we're testing at the moment. Now, if that were to be broken through, which I expect to be the case, we should then be heading up again towards the late June low and also the mid-August low between 125.91 and 126.17. So that's the next upside target area for cable. And here, from a technical perspective, as long as we stay above the last reaction low, that's to say last Thursday's low at 123.77, the uptrend is very much intact, with further upside likely to be seen. Now, the weaker US dollar also had an impact on dollar yen. And here what is really interesting is that dollar yen, which last week tested its October 2022 high and nearly reached it 151 yen and 91 cent. It was just 4 ticks short of that high before then reversing very quickly lower and not just falling through this tentative July to November uptrend line, but also today through this 55-day simple moving average at 149 yen and 25 cent. And we are now trading in 5 to 6 week lows with regards to dollar yen as the US dollar continues to weaken and as we're heading down towards the early October low at 147.29. So that for me is the next technical downside target. And failure there could actually take us all the way back down again towards the June high at 145.07. And from a technical perspective, I already warned of this last week. We did see some negative divergence here on the oscillator where the latest high, which was made at 151.91, wasn't confirmed by the relative strength index, which instead made a lower high. And that did then lead us to this reversal that we're seeing at the moment. So very likely we'll see further downside with regards to dollar yen on that weakening US dollar as yields in the US continue to weaken. The weaker US dollar has benefited some commodities, and we'll look at these in a minute. But before we do, I'd like to look at the Brent crude oil price. And what we can see here is that the price of Brent crude oil has slid very, very sharply and dropped to last week's low at $76.67 on this daily financial bet, a level last traded in July of this year. before then reverting very sharply to the upside ahead of this weekend's OPEC Plus meeting, where OPEC has already announced that further supply cuts are on the table. And on that worry about supply being curtailed, the Brent crude oil price is heading back up again towards the upper downward trend channel line, and also the red line here at $82.16, which is basically the 200-day simply moving average. So that's the next upside target. And it, together with the August lows between $82.31 and $81.68, could offer short-term resistance. And if it were to be taken out, we could then head back up again towards the early October low at $83.12. So short-term, a reversal is being seen here. And again, what is interesting is that we are seeing some positive divergence on the relative strength index, basically comforting us in this view that at least on an interim basis, the Brent crude oil price has probably formed a bottom here short-term, and that we could actually over the next few days head back up again towards the mid-November high at $83.79. Now, this is a line in the sand for me from a technical perspective because it represents the last reaction high, a high which is higher than the one to its left and to its right on this daily candle. And that was made on the 14th of November last Tuesday. If we were to manage to rise above that high, perhaps once the OPEC Plus meeting has taken place on the 26th of November, then we could potentially be heading back up again towards the psychological $90 mark, and also the August side $7.83. But that's the big if. Let's first of all see whether we can continue with this upward momentum over the next few days. It certainly looks like it. Next upside target being the 200-day simply moving average at $82.16. Now, I mentioned commodities which benefited from the weaker dollar, and you can see that here on the daily financial bet of the spot gold price, which last week rallied here all the way up to $1,993 per troy ounce. Before this week, slightly coming off again, despite the greenback depreciating. And what we're seeing here is basically the price of the gold price basically being capped by the July high at $1,987 per troy ounce. And we may short-term retrace back to this October to November uptrend line, which comes in around $1,955, and together with the August high at $1,953 should offer us some pretty good support. Technically speaking, again, provided we stay above the last reaction high, that is to say last week's low made on Monday at $1,932, so not high, I should say last week's low here, provided we stay below the last reaction low, the uptrend is still intact. And it would mean that a rise above Friday's high at $1,993 would not only put the psychological $2,000 mark back on the plate, but also the high seen back in October, $2,009. Now, a rise above $2,009 would have some very positive bullish implications, because it would then take us back up again towards the high seen between 2020 and 2023. So we have the 2020 high, the 2022 high, and the 2023 high, all of which come in between $2,070 per troy ounce and $2,083 per troy ounce. So these are potential upside targets if we were to rise and close on a daily chart closing basis above the high seen back in October $2009. And as long as we stay above $1,932, the low seen in this latest move, which incidentally was made around the 200-day simple moving average, which acted as support. And last but not least, I'd like to talk about silver. Now, in line with gold, silver is coming off slightly again today. We did rally to $24.14 per troy ounce last Friday, and are now heading back down again towards the 200-day simply moving average here at $23.29. But again, as long as we stay above the last reaction low, that's to say the low from last Monday at $21.83, this uptrend we've seen since the beginning of October remains intact, and it would mean that we could at some stage test the July to November downtrend line, which currently can be seen around $24.20 over the coming days and weeks, and a rise above there would then take us probably back towards the July and August highs between $25.01 and $25.26. Thank you very much for watching Charting the Markets with me, Axel Rudolph. Please feel free to follow me on X. My handle is @AxelR_IG.